Okay, it is Tuesday the 23rd of September. Currently looking at the four indexes, and I'm not so interested in NASDAQ or ES today, and that's simply because, as you can see here, there really isn't very much narrative. We are sitting right at 25k, so that's 25k exactly there, just gyrating around that level. And if I was to pick something to happen on NASDAQ, what I'd favor is us attacking this low for trailed stops. And in order to do that, I'd only feel comfortable taking the trade if we first ran out the highs and then broke down, and then I'd catch a short down like that or something. But that's the only way at the moment, that stands out to me. What I do like is RTY and YM because, well, there's a bit more action overnight, a bit more narrative and clear liquidity pools for us to target. We've just taken out this major high, a really long work on the daily chart in the hourly. We just ran that out, spent time above it, broke back down, took out this swing low, now climbing back up. So there's a bit more going on for them at the moment. This is the RTY chart. Nothing for me to do just yet, but it does look like the RTH trailed stops framework may actually set up today. I'm not entirely sure how high up it will go beforehand. We have the 500s sitting just above us, so we may want to dip above that first. But what this model is, this framework is essentially we have a regular trading hour gap up. That means we're looking for a short. Step 2 is what is the regular trading hour and electronic trading hour narrative. And as you can see, this is the RTH chart. The regular trading hour narrative was that we were rallying all day, enticing people to buy. We also have an original consolidation down here, seen with these opening prices, as well as being held at a premium above these hourly opens. But we were rallying all PM session, and then right before the close, we had this drop lower, engineering a nice obvious low for trailed stops. So that sell side pull really stands out to me. The electronic trading hours is a narrative. I'll jump over to the 5-minute chart over here. So on the 5-minute, you can see what happened since that 4 p.m. close. We then gyrated sideways a bunch. We took out some sell side, but didn't take out this low, meaning that we kind of created relatively cool lows down here, which is interesting. And then we started rallying, enticing longs going into the open. We then have a bull flag. So this is very key. We have a bull flag that successfully breaks out right at 9:30. So the ETH narrative is that we have this bullish order flow and there are going to be breakout longs in the market because of this bull flag that just played out. That fits in with what I'm looking for the short. Another thing that stands out to me is, see the sell side pull that I mentioned, the regular trading hour sell side will be right here. That aligns with these relatively equal lows from just before 7 a.m. So smooth lows also just happens to be a institutional level of the 80s. And you can see how the picture is beginning to paint really nicely. Currently, we are going for that previous week high. So it's actually relatively equal highs. That is the PWH. So I'll mark that out. And as I mentioned, I don't know how high up we'll go. We may just tap it. Maybe we won't even tap it and then come back down. But I'm just waiting for the order flow to flip bearishly and for it to provide me a clear entry model to jump in on the short side. I don't usually trade RTY. I did a bit more in the past. But when it is in play, it has some epic moves. And today it is in play. So expecting greatness, nothing less. So for now, I'm just going to be putting all this stuff up here and yeah, looking for some signatures of us turning around. When trading RTY for SMT, you use YM. There we go. Then I can also look over at this chart as well. which I'll expand out a bit. That's that previous week high I mentioned. So we've just tapped this high, it looks like, as well. So it's 98.3 versus this 98.3. So we made perfect equal highs with this impulse high. You can see that YM is expanding higher. We actually closed yesterday above this previous all-time high. I'll show that to you real quick on the daily chart. I believe it's all-time high anyway. But it's kind of interesting to see that we have 1, 2, 3 wicks into that previous all-time high. And then on Monday, we close above it. On Tuesday, we failed to retest the all-time high and we just continue to pump higher. This is not a pattern that I'm familiar with, it's just an observation. So I wouldn't know if this would mean that the fact that we closed above the all-time high, that it's going to be a successful breakout, or that they're enticing people to buy a breakout, because I don't know how that style trades and where the narrative is liquidity-wise. But yeah, interesting to see how we worked multiple times, each time not managing to close above. Then eventually we did close above after taking out this previous day low, and now we're getting this nice push. I'll go back down to a lower time frame, the 4 hour, 1 hour. Looks like it may actually be moving down already. So we made perfect equal highs of that high. What's important to me at the moment, this low, let's see, it needs to reject from this low. This is the most discount short-term low, because this low took out this low. That means that's an intermediate term low. This is all internal range liquidity. If it was to come down here, it would need to reject quite aggressively back up for it to be bullish. But as mentioned, I'm wanting to see it not manage to do that. We do have SMT on the highs. If I made a higher high, we did not. So it's worth watching. Be putting on 3 contracts if I do take a short. No displacement yet though. It's quite a very high resistance on this push higher. And as I mentioned, we've got that breakout bull flag. The fact that we actually failed to hit the previous week high may also be indicative of us having a deeper aggressive pullback. But what I want to see is, as we hit this short-term low, do we reject back up? Or if we fail to do so, I'd potentially sell a impulse rejection failure below this low. Would have preferred if it had actually taken out the previous week high, because I don't actually know if it's that realistic for us to go from perfect equal highs of the previous week high all the way down into this area. I'd much prefer that we tap that first. So if I do take any short entry without that happening first, it would need to be a very obvious narrative and a very obvious entry. What that would look like for me is we'd first have to get an impulse rejection from a high, then that and be immediately followed with a key signature such as the last second wick, and also a impulse rejection failure from here. So basically what I'd want to see to take a short here would be us to tap, let's say, this short-term high, and then reject quite hard, very last second. So last second producing a long wick, and then you'd sell like right there. But it looks like it's going to head back up. So just observing at this point. YM making another high. As I mentioned, watching this, watching to see if we do want to reject from here or head or continue pushing higher. Also looking at the 5-minute chart. This candle, I like the fact that we have this long wick to the downside. So anyone chasing this long right of the open, they're going to see a beautiful bullish rejection for them to trail their stops. but then we also left a long wick to the upside. So if we do take out this long wick and then take out the previous week high, this, yep, beautiful. So now this is beginning to look a lot nicer for me, and that's because we have this 1 minute long wick. And you'll also notice how if we look at the 15-second chart, that wick took 45 seconds of that candle to develop, meaning that it was not a last second wick. We then made relatively cool lows with it, and also a 5 minute long wick that was also not very, I mean, it was last second actually, but still, leaving these long wicks indicates that we're encouraging traders to move their stops down to this level. So this becomes, if we do get a nice reversal, this will be a lovely target. And we've just gone above this 500s level. You can see that YM is actually about to hit 47k. Now, this is the first time YM has ever been to 47k. Because that's the case, there is no liquidity here for us to attack, meaning that there is a higher likelihood that we're going to come here to engineer liquidity to then come back to a later date. So this is when your support and resistance institutional levels will be more likely to hold as support and resistance, is when there is no pre-existing liquidity there. So what I mean by that is I don't expect that because we hit 47k, we're going to instantly go 200 points above it. We could, but we could also just sit around here, create some smooth highs and then sell off to come back to. It's a nice strong looking market at the moment. Watching the time as well, 9:48. See Nasdaq dropping lower. What I'd love to see on Nasdaq is if we are now able to head back up without taking out this swing low, then I'd be very confident with looking for a short from up in this level somewhere. So we've essentially hit 25k, gyrated around there. We're dropping down, taking out some sell stops. We could easily rally from here, but there is no obvious low for people to trail their trailed stops at the moment. So anyone who bought chasing yesterday's move, they're not going to be dumb enough to put their stop right below here, or not all of them will. They'll choose something a bit better, like down below this low. Or once this low is dropping down, they're all nervous. And so if price eventually, goes from here straight back up, then all of a sudden there's a beautiful low for stop losses to accumulate below. This is also balancing this fair value gap, meaning that if we are able to balance this fair value gap, head higher, then when we come back down, we will no longer need to paint both sell side and buy side delivery within this fair value gap range, meaning that we will be able to overlap it quite aggressively. Because at the moment, if we were to continue lower, ideally would want to do something like that. But if we're able to do something like that, then when we come back through, we can do it in one clean shot and it'll be a lot faster of a move. So that's what I'm really looking for there. Key levels above the 500s. I mean, I would imagine, I don't trade YM that often, as I mentioned. Ideally, you want to be looking at the 20s, 40s, the 20s, the 80s, the 50s, and the 100s. But I'd imagine that 10s and 20s and 30s all play a slightly significant role. We've been 5 points above. So all I'm looking at here is, okay, well, this is 5 points above 500. So let's say someone was selling at 500 at the smooth previous week high at the 500s. I think it's resistance, and rather than going short here and putting their stop loss at 500 exactly, they're going to want to put their stop just a little bit above, maybe 5 points, maybe 10 points, probably 20 points above, trying to capture that large move down from this previous week high. So if I zoom out a bit, I'll move this over actually. So this is my, hold up, hourly. This is my thinking. If you were trying to short from the previous week high resistance level, you're not just going to put your stop at 2,500, or you might, but more likely people are going to think, okay, I'll give it a little bit of breathing room up to 505 or up to 510. So there are going to be layers of liquidity up here. There'll be, let's say, a bunch of liquidity here at 505. There'll probably be another cluster of liquidity at 510. At 520, if we're sure there's going to be a major amount of liquidity up here. And so each time we're hitting all these key levels, you can imagine that there's going to be a large influx of buy orders from both the breakout longs above 25k in the previous week high, and also the stop outs for anyone who was trying to short from this, whatever this move was here. So as we hit 510, very interested to see what we're able to do. And I'm watching the 5-minute chart mainly because it's a time frame that gives me a bit of narrative with the candles, such as this long wick. You can imagine that looks like a good place for trail stops. This large up closing candle looks extremely bullish, breakout above the previous week high. I'm just looking at the narrative behind what the candles look like in order to find what anyone who chases individual candles might be thinking. So as we approach 10 a.m. news, what I'm thinking is how we have already begun enticing shorts ahead of the news. Because that's the case, I'd like to see if we do want to run out the high once again at the news before dropping off. It is disrespecting a few bullish PD arrays such as this BISI, indicating potential change in order flow. We do have this wickless 1 minute candle down here, and so for us to come down to this level, that's a possible reason why we could reject back up from here. But if we were to take out this low, what I'd want to see is intention when going below this low. I'd be expecting speed and distance below it. If we can get some good speed below this low and show intention of not just going down here, go back up, but more, what I don't want to see is just dip down here and then come straight back up. I want to see us drop down quite aggressively and then do something like that. Because of this being a news candle that rallied straight up from an obvious relative equal lows, that also supports the idea of this being a short down here. Anyone who's buying up here, where is their stop loss? Their stop loss is all the way down here or even lower. So really interested to see if we can get a short in this area. So this gap does interest me because we have now traded back above it. If this was bullish and we retrace down like this and then get back above this gap, you'd expect this to hold and send price higher. So I'm interested to see if that happens or if we fail to do so. If we drop back below, that might be worth it for a stab at the short side. However, I'd be using these wicks as my entry. I'd be using this longer wick here, or the lower wick. If we can drop down here, I'd see this as a failure swing. That's the wrong one. Okay, it's a potential short. And if we can get a push down towards this low, that could be an early entry. And then once we hit this low, I'd require that it pushes below it quite aggressively. But I might go short in a second here. So I'm just watching, first of all, As you can see, this sold off, but this wick right at 10 a.m. news, it was not a last second wick. So that's a bit of a warning sign that it might not actually be the real rejection. So we do have these smooth lot highs, but we did reject this short-term high. It's just that this wick formed in 15, 30, 45 seconds, and then right at the last minute it closed down here, but it didn't reject really hard from that level. So that's why I'm waiting for slightly more confirmation. If I do get an entry below this wick, I would then require it to drop below this low with speed and distance. Otherwise, I'd be prepared to cut the trade. But we do have the SMT on the highs, but yeah, just not a fan of it just yet. But it would essentially be something like this if we get it. If it drops below these lows beforehand and does push down and I'm unable to get in before breaking this low, I'd still just be looking for that speed below it and then be trusting that we will get a continuation lower down towards this low. We did close with a 5 minute long-ish wick here. But as you can see, still we haven't been closing below this wick. But we are pressing down into it, and that is actually a signature in itself that we're likely to push below it. So I am pretty close to sending it. Yep, that'll do. So going short there, stop is going up at the 10 a.m. open. That's because it's above this fair value gap. Now we have just hit this low. So what I need it to do, I need it to continue pressing lower and get a bit of speed below it. So like that closure below in the 15 seconds. If it starts rejecting straight back up, then I do not want to be in the trade anymore. So I'm actually tightening the stop down to this most recent, down to the low end of this gap actually. Like that closure below, it's a bit of speed down below it. We don't have SMT with YM on the lows, so that's also a good sign. We've only got SMT on the highs. I'd like to see a gap left open here, however. I can adjust my entry down to this area. So that was the initial stop loss. I then tightened it quite fast to there. That's simply because if it came all the way back up here, then it's not showing me the weakness I require. Don't really like how much time it's spending down here. Got 15 seconds left of this 5 minute candle. Now the very next candle, I don't want it to run high. I want it to drop straight down. Because ideally we want to be leaving at least some inefficiency. So I like how we did leave a fair value gap here. But we also closed back above that low, which is not really what I wanted to see. If we are to close back below this low now, I'd be able to tighten my stop loss to whichever swing high we created prior to that. So I'm watching the midpoint of this 5 minute wick as well. Because here my stop is above that level. So I want this area right here to reject, and I might actually just cut it. Yep. Cool, cutting price, cutting it there for small loss. But yeah, as I mentioned, I needed speed down through this low, otherwise it's likely just to reject back up. And now at this point, what you can watch is any of these swing highs, such as especially this swing high. I'd be interested to see if it offers a long opportunity, which would simply be if we were to drop down below any of these 15-second lows and then close back above. That would send us back into the highs. So YM making a new high. See if we're able to continue making these lower highs. Clean up this a bit. Yeah, this long wick just here that I have marked out with the green line. See the midpoint of that wick? We're pushing into it on the 15-second chart, and that is indicative that it's likely to melt through it, which we do right there. Might as well leave this on just so that I can visually see what I was looking for. Don't really need it actually. So now if we were to get a 15-second closure back above this high, that would potentially be a long right there. So you could buy with a stop loss down here. Which is not what I'm looking for, but just an observation. You can see YM actually rejecting this high. So rejecting and heading back down, and we still have that SMT on the highs. So this is beginning to actually look all right for heading back down. So I'm kind of curious on, no. What I can see at the moment is how we've been enticing longs straight out the open. We made some smooth lows and enticed again with this news item. We then consolidated a bunch after having broken out above these highs. And then news happens and it drops aggressively lower. Anyone who's been chasing the long, they see, oh, news came out, it's bad. Oh dear, this is not good. And so they're all going to be trailing their stop down to this swing low. So anyone who was long throughout this range, their stops are now at this low. It's engineered very nicely. Now we're heading back up. So if we were to now run out the highs or turn around at any point and start hitting lower, it's just becoming higher probability that we will attack a nice pull to the sell side. As you can see, that did play out. And the reason why I chose that is the invalidation for the long, that swing low, despite it making perfect equal lows, and now we've just taken out this high, so that would be break even. But the reason I use that is because if you look closely, you can see that after having broken out above this impulse high, with speed and distance that showed intent of going to this high, we then pull back down, and all we need to do is run out a low, such as this swing low. We just need to run out a swing low below this line that indicates that we've now successfully had sell side delivery. When we then get a close back above this line, that's now us having switched, or at least broken a high, which you could call that a short-term high, that's switched to buy side delivery. As you can see, it actually never took out that low. Okay, and made perfect equal lows with it, but it didn't take it out, and then you're getting this push higher. So if you'd, these kind of trades, like obviously it's going to feel uncomfortable having such a tight stop, but let's say you got in here, or even worst case, you got in at the high end of this wick, like that would be the worst possible fill. And then you have your stop loss maybe a few ticks below. You know, already just up to this high, you're at break even, you're almost at 1R. To this high, you're already at 1.3, and then you can quickly go up to 3R, and if we get an extended move out of it. That's how you can get high leverage entries. So hitting that 510 area, YM has just hit the 50s as well after going above 47k. Still paying attention to this chart up here as well. We'll be having a 15-minute closure soon as well, which looks like it'll have a nice long wick engineered right here. And that's also what I want to see. Also, the reason why this was a valid trade isn't because that pattern existed there, it's because it was following a impulse rejection. So if an impulse low on the 1 minute that gets rejected, after rejecting it, then you can then drop to a lower time frame and look for a impulse rejection failure, which is basically the antithesis of that initial model. So hitting the 510s, beginning to get a nice bit of a drop lower. We do have SMT with the 1 minute right here. I like the fact that we left the majority of this to be open and unfilled, but I'm not ready to jump in just yet. Just watching this 5-minute wick formation. We do only have 2 minutes left of this 15-minute candle. So at this point, what I'm asking myself is, if I was bullish, what would I expect to hold price? And what I want to see is those PD arrays fail. I really like how we have this rally from this swing low, making that an impulse low that really stands out. If we were bullish and we dropped all the way down to this low, it would have to reject straight up from there. So if it drops down to this low and then fails to reject, then that becomes a really nice potential entry. I like how we're closing nice and deep down here, and this is another area I expect this wick should really hold price, so that's a short because we've got the SMT as well with YM on the 1 minute after hitting that key level. Wrong line. So SMT, you can see that with YM, we've hit this level of liquidity. We're showing bearish order flow, and now once we hit this this low, it needs to reject, it needs to push through it. So similar to down here, what I don't want to see is this situation unfold. I want to see it get below it and then close back below quite soon after. And I was simply going short based on that line. Now we do have 10 seconds left in this 15-minute candle. So what I'm looking at now is how we are creating this long wick on both the high end and the low end of it. I'm identifying, okay, how many minutes has it taken to create the long wick? Took 4 minutes. So it's the final 4 minutes of this candle created the wick. That's a relatively last second rejection. Not perfect, but it's not too bad. So love that speed we just got down below. That's given me confidence in this trade. And that we're going for this low. Once we hit this low, once again, I want to see that speed and distance down below it. This is a deep discount of this internal range. So this short-term low on the 15-second chart also has the ability to potentially reject price back up temporarily. But I'm not going to be taking a partial just down here. I want to see if we can get a push down below this low. So creating this long wick at the moment, but as you can see, once again, that took 15, 30, 45 seconds to create this wick. That's not a last second wick. I want to see us now take out any short-term high above, maybe even this impulse high. Once we do that, get a closure back below this line, and that would be a place to add more to the trade. So we have now taken out a short-term high, as you can see. Now if we can get a closure on the 15 seconds, no, sorry, the 1 minute closes back below, then I'm going to be adding into the trade with fairly heavy in 20 seconds. And that's because, as you can see, we just had this short-term high taken out. And now if we can close back below, that's a short right there. 3, 2, 1. Yep, it's a short. So now I've got 7 short, stops getting very tight. And now because I've done that, I will actually take something off down at those lows. So I'll take 2 off down here. Looking for that push down through these lows. And I also will likely want to, let's see, I've got 7 on. So I just added 4 and tightened the stops. Now I'm risking 200. Before I was risking, can't remember exactly how much. But yeah, this is the impulse rejection failure model paired with a impulse rejection. Well, not really impulse rejection, but that just indicates the buy side delivery above this high. The only issue with this model is that it doesn't mean that this is never going to come back above this high. It just indicates we're going to have a run lower and then it could come back up here before selling off again. So with that in mind, I might actually change this to 3 and then be prepared to go to 3. Yeah, I'll do 3, 2, and 2. That's what I'll do. But be prepared to go to break even once we have broken this low. And just basically demand that it keeps on pushing. So we haven't actually taken out the swing low just yet. Ideally, you only want to use this as an entry for second stage of a market maker model, which is not what we have here. So that's another reason why I'm going to be going to break even really fast as soon as we break this low. And that's just because with second stage of a market maker model, you've already had first stage and you're expecting speed into the draw. So that's more likely to occur around, let's say this is the draw, and let's have our first stage here, and second stage might be here or something. And then you can use a similar kind of pattern on the lower time frames. So as soon as we break this low, then that's break even. So break even. Now I want to see if we can get that push down to this low, take something off there, and then yeah, basically be looking to see if it wants to keep pushing a bit lower. If it does come back up for our stop, that will be fine, and we'll likely get a re-entry up around here. But as you can see, already getting that sharp rejection straight back up. So that's the only not ideal thing with an impulse rejection failure as an entry, is you have to be using it in a fast environment for it to be very effective. But I just want to see if we can get this short-term low right down here, this impulse low. I think that's a good probability we're able to hit that. Just look at the 5 minutes. There's also a 5 minute low as well. So good chance we're able to knock into that. But I don't really like how much time we're spending just sitting here. To me, it's beginning to look like it may want to run up above this long wick once again before selling off. If it does, what I'll be looking for is this to become a impulse rejection, either that high or this short-term high just above. There we go, there's our first partial, and we're getting some nice speed below this as well, so I really like that. And we're going to actually trail this down now. Cool, so that's worked out really nicely. Hitting this low, I've got this TP right here because, and I might just trigger that in now, because we have the 500s, and what I'm thinking is that it may drop to the 500s, create a false low, like it may do something like that. And because I have such a tight stop loss currently, obviously I can't withstand a big pull back against my position. So what I'm looking for is, yeah, it either needs to continue or reverse on me. But I like the speed we got below this low so far. We did close just above it. But if we can get a nice push down into the 500s, then I'd actually have a lot of confidence with us heading all the way down to these lows and at least this news candle low. So I'd be taking the next partial down here. And this stop loss is sitting just above here, essentially demanding that we leave some form of a gap. If we don't leave any kind of a gap, then if it comes back up, you know, these highs could be tapped before hitting lower or back up higher. So keeping an eye on YM as well. So far, it's looking very good, very healthy. We just have the SMT on the highs at 10, 11, 10, 12. And now YM is heading lower with RTY, so both of those are in agreement. This is potentially where you could start seeing some more speed, especially if we are able to leave this unfilled. I'm also noting how we have a long wick on the 5-minute chart, followed with a fair value gap potentially. We'll find out in 1 minute. If that is the case, that is indicative of heaviness. But if we reject from this low, then that negates that. So just looking at these wicks, we're leaving multiple smooth wicks down here. It's also not a last second wick. It forms during a 45-second duration. So getting a bit of a push up into this range. My stop sitting just up here. And this, nope. So we do have SMT right here as well. So this could potentially be a nice move as well. Similar situation to over here with these long wicks getting run through again. And getting that nice push lower. So as I mentioned, the reason I had my stop loss here was because I'd want to see a portion of this fair value gap stay open, so definitely no closures above. We then have this wick as well. This wick is, because it took out the previous week high, it is essentially an order block from that open to the high. We fell just short of it there, but you can see that up closing candle took out these highs, so need to give it permission to head up that far, but if it does, I'd need to reject quite hard, which it did. So hitting that 500 level right there. A nice deep looking closure. 1026. Now we have the narrative of the entire AM session behind us. So if we zoom out, you can start seeing, okay, well, we had enticing longs into the close, a low engineered for trailed stops, 930 continues pushing higher. We have this bullish news that ran higher. We then had this news that came out bearishly. Anyone who was long gets nervous. They move their stop loss down to here. And then we rally higher. So everyone's big sigh of relief. We're now dropping heavily. Notice how there were no deep retracements here. That's a signature of heaviness, leaving all these gaps unfilled. Dropping heavily towards this low, and now we have trapped longs. Any traders who don't have their stops below this low, they now have their stops down all the way down here, which is quite a distance away. And so what I want to see is us not just drop down and start moving back up like we have here. It's not ideal, but I want to see us actually start getting some speed down through this range towards this low. But yeah, not ideal how we did just create these lows and just slowly drifting lower. But as long as we as long as we keep on pushing lower and remaining heavy, then we can also have the narrative that people were buying through these candles here, and now they are trapped long, and we will not come back above this low. So ideally, I'd want us to remain below this lower candle. But this comes back to that same idea as I mentioned with the 500s. Could be coming down to this previous week high to create false support, rally higher, entice more people to buy before selling off. But because of the movement we already had over here and the amount of time we spent already consolidating just above this high, I think they may have already done all the accumulating they need to for us to drop off lower. But yeah, it's going quite slow at the moment. So just jump and look at everything else. You can see that we did close with a deep candle, filling in this range, but respecting that old high with the closure. SMT on below is a VS. So it may be looking to do what I mentioned earlier of hitting up first to take out the buy side before dropping down. So just keeping that in mind. That YM rolling over lower. So when YM does hit this swing low, because it's an impulse low, I'm very interested to see if that creates any SMT or reaction. That's also 100 points below 47k. So as I mentioned, we just broke above 47k. Very good probability we drop below the 900s after having done that. And you could probably say the same with RTY going down to, let's say, the 90s down here. So this right here, that was a last second wick that happened very last second. We ran straight up. I do not want to see us close above this high. If we rapidly overlap this wick now, that would be a good indication that we're likely to keep on pushing lower. So it's 10:30 currently. Look at the 30-minute chart. We now have a nice swing low. 15 closing down below this low. So that's showing a bit of weakness there, leaving this wick completely unfilled. We are unable to go a single tick into that wick. That's also indicative of heaviness, so I'm confident just holding on to this for now. And I really like how we're overlapping this wick right after having formed it. This has given me also a lot of confidence in this trade. So I am taking out this low. I want to see a nice strong push below it, so I don't want to see us reject from here. I like how we just tapped above this high and we're kind of pushing lower from that. So I'm comfortable with where my stop is. I don't want to see it come above this high, that's for sure. And now that we have hit the low, if YM starts rejecting straight back up, then I'll look to be a bit more cautious on this position. But at the moment, we're looking really healthy. As you can see, we're likely about to get a closure right below that. So now I want to see that hold and see us low. So now it's stop going at the high end of this wick. So that could have been a place if this low was further away, that'd be a nice place to add. But at this point, we've locked in a nice portion, and now I'm just looking for speed down to this news candle low. That's where I'm taking the next partial. So the reason the stop loss is here now is that we have this long wick. We closed back below the midpoint of it, and I want us to remain heavy. And because of that, the midpoint should act as a form of resistance. And so if we reach all the way up to the high end of it, that means that, well, we traded well above the midpoint. Like how we've still got these smooth lows in YM just below where we are. So we begin to melt through that. Hopefully we can see RTY follow suit. But I am noting that we haven't taken any 5-minute highs since 10 AM or since 10:10. None of these 5-minute highs have been taken. It's just been sinking lower. We created a long wick here. We've just tapped that, and now it looks like we're rejecting straight back up. So that's not a very good sign. And so it would be very logical for us to run up and take out a few 5-minute highs before continuing. But it's not looking quite like the trade I was hoping for. As I mentioned, all the way back here, I wanted to see speed down through this range because that would indicate that we were heading towards this low. And we didn't get that. So that's the trade. I'll turn on it. Executions. So the initial short was as we broke down below these wicks after pushing into it, wanting to see us break this low and have speed below it. We closed below it initially, but then quickly came back up. I gave it the chance to have another push lower, but it came straight up, so I took a partial stop out there. Then rallied up, made a new high, hit this key level of liquidity, 10 points above this previous week high and resistance level. We then put an SMT at 10.11 going into 10.12, which we can see right here. SMT had that nice drop lower on YM as well as this. I recognized on RTY how if I was bullish, one, you would want to see this wick kind of hold price and this wick here. So this kind of area would be invalidated. And also it would have to reject from this low. That's why I was able to add in heavily here. But the initial entry was actually just above that. As you can see, it was as we closed below this wick, because I saw this as a balanced price range, a single pass up, single pass down, as well as the fact is that we had this obvious impulse low with an enticement away from it. Because we had that, it was indicating it was likely to take out this low. So I knew I could easily get in here with a stop loss up in this gap. And once we got down to this low, then I'd be monitoring to see if it offered another entry, or if it rejected back up, I'd be able to mitigate my position as well. Another signature is this long wick up here, and then the next candle fails to reach the midpoint. That's also indicating bearishness. And this wick formed in the last 30 seconds of the candle, so not the last 15, but it's still, it was a pretty fast drop lower. But yeah, this area I was able to add in really heavy using the impulse rejection failure model, which as we drop down below this low, the idea is if I'm bullish, this low should reject price back up. If I'm bullish, you like it'll hit this low, that's a long. But when that fails to happen and we run back up, we do buy side delivery that takes out a short-term high or any durations candles high, such as this 15-second candle, then drops back below, closes back below that candle. That becomes the short entry right there, right as that candle closed. And as you can see, we sold off straight from there. And I moved, as soon as we broke this low, went straight to break even. The reason for that, which my break even point at this was then about here, because I had this initial entry up here. But the reason for that is because, as you can see, we could still sell off from this area, but these work the best in a fast market and for second stage of a market maker model, which this isn't. So I knew that there was a good chance we could just tap a low and run back up. So I was managing risk according to that. And thankfully I had a initial entry up here, so my average was high enough that after breaking this short-term low here, these little runs didn't bother me at all. Then you got this nice strong break lower. I took a partial as we hit this short-term low. And then also as we drop down here, we have the 500s sitting just here. So I was going to take a partial just above that. Ended up taking a partial, just moving the stop up, the take profit up slightly, just get that fill. Then recognizing that it was very high resistance through here, which wasn't quite what I was wanting to see, so moving the stop down a little bit. Also keeping an eye on YM, recognizing that we'd broken above 47k, likely to hit the 900s, impulse lows, smooth lows. Once we hit this level, what's going to happen? And sure enough, we get this rejection. Interesting that YM doesn't really reject, it's more just RTY. So RTY is showing a bit more strength at the moment. So yeah, overall, pretty good trade. I wish I could see, I don't know how you see what the P&L, oh, here we go. For each of them, 2 units, 2 units, 3. Yeah, because I had 7 on, so 3, 4, 5, 6, 7. I think the initial position I was risking about 350 or so, I think, which was this one here. And then when I added here, I was only risking 200 total between all positions. So never risking over 350, let's say. Can't remember exactly what it was, but made well over 3R. And then if you count this entry being risking 200, then, that becomes a good 6R or so. And 5R. That's something I want to lean into a bit more, is finding tight entries, being very tight with risk and stops. Because if you're able to capture, 5R, 10R and things like that, then you need, if you have tighter stops, you don't need it to go very far to make a lot of risk multiples return. And as I mentioned, this isn't the ideal scenario because it's not second stage. But if you're able to get this kind of tight entry, and we were about to have a major move. So if you imagine, where's my tools gone? So if you imagine this same entry with a tight stop, which was, that stop was that big. And let's say over in this area, we then had second stage of a market maker model, and we had the same thing there. And let's say I got in with a entry like that. All of a sudden you can easily get, it's very realistic to have a 5R move and then move to break even, see if you can get a 10R. I want to try and identify areas where that is possible. But yeah, this, as I mentioned, not the ideal entry for this particular scenario. Just after spotting reversal, not the ideal entry, but it can work. You just have to be ready to go to break even really fast, or at least manage risk. That's why I took off 3 just below this low. So right there, I took off 3 out of my 7, and that's because it was, still a good 1.5, 2 hour. Let's see what it was actually from where I added. So I added right. Hold up, I need to move this over. Added here, and then the stop was above that high, and then the first partial was at that low. So it's 1.4 to 1.4 R to the first partial from this entry, and then I've still got the other contract that I added up here on, plus all of these on. So I've essentially covered the entire risk for the trade, and I've got 4 contracts still running from this point. So that's why taking a good enough portion off pretty fast so that it's a winning trade no matter what, and then I can comfortably move my stop down a bit, and worked out quite nicely. But I think that'll do for this recording, and just an interesting, nice little scalp down in this direction. This would classify as good enough. We did just hit a significant-ish sell side pull. It just happened that it's still bullish and wanted to run up higher from that. But this is a good enough target for us to hit. So once we hit that, anything beyond that is a bonus. And then as far as for my execution, the final thing I want to mention is how, as we were hitting these lows, I was very aware of that, and that could affect the RTY price. And you can see that's where I went. Move my stop down to this array, gets that rejection right at 10.35 and runs higher. That long wick, the fact that we rejected from below that long wick, is also a clue that it might be reversing from there. Yeah, that will do for this trade. So just jumping back on, because I went across to NASDAQ and started seeing a potential model that may play out. It may not, but it might. So what I'm seeing is, this is my draw, this impulse low that's had this big rally into the close, went sideways a bunch, kind of like a impulse low plus a bull flag, and we're breaking down now. After this sell-off in the AM session, we're leaving all these smooth lows. A lot of people will be looking to buy and go long back up to the highs. And my draw is lower. Now, what stands out to me is how we go back over here. We have a low, a nice enticing rally, and then a bull flag. A bull flag against these relative equal highs. We then get a breakout above those highs. So anyone who was bullish, see a bull flag, breakout, everyone's buying up here. Aggressive break back down. Anyone who bought in this range, they're now trapped long. Their stop loss, if I grab out this guy, has a stop loss below the low. He's getting really nervous. Price pulls really close. And then big sigh of relief as we slowly begin moving higher. Nice big move up here. Big sigh of relief. People start adding. There are now more people buying as we're climbing higher, thinking, well, that was a close one. This bull flag almost failed, but the buyers are taking control again. I really like this model. The reason why is because we have all that narrative, and then on top of that, I can wait for a very high confirmation entry. That entry is this, with the bull flag breakout. We then have this run back up, giving traders hope that maybe it will continue. I want to see an aggressive drop back down. Once we get that, that's going to be a short entry down this area. So I'm liking this so far. I want to see a nice strong drop down. And then that would simply be a short down here. Going to get rid of, I'll move this prediction over to the side for now. but really liking this. We are now dropping below the 50s as well. So in order to get long off of this, I'm watching this range from this open to the low. This is a order block. I'd like to see us get below the midpoint of this range. We are pushing down there with wicks. Ideally, I want to see us get down below it with a candle closure below that line. That'd just be an automatic entry short. But I'm really close to just smacking that sell button right now. That's looking really good. So at this point, we've just hit this old swing low that we just rated. So this swing low we rated with this candle, creating the order block, pushed back up higher. Now if it was bullish, it would have to reject back up from that same swing low. But it doesn't look like it's going to. If we do close below the midpoint of this, I'm going to smack the sell button. We didn't quite. But I like how heavy it's looking right here. Just giving us the chance to have another pop higher, but I'd expect us to remain heavy. Definitely don't want it to head up here. Currently 10:59, so 1 minute to a new hourly candle. So just going to quickly check all the time frames. The 15 minute looks pretty good. Got the 1 hour. You'd expect this to remain unfilled ideally. Getting a nice rejection from that high. I'm going to slap the short right there with a stop loss, the high end of this wick, and expecting heaviness down towards these lows. If we do sell off, we have all the sell side down there. I'm looking at these institutional levels. We have the 20s sitting right here. So I'd go 22.5. What the edge is the narrative. So we know that there's going to be people wanting to buy up in this area, looking for that run back up. We've already rejected from this buy side bull. But as you can see, the narrative is that we had this bull flag and then a bull flag breakout. Everyone gets excited, everyone gets long, everyone loses hope and is really scared. People start getting hopeful again, have an enticing rally up. Everyone's like, oh, that was a close one. This guy's a huge sigh of relief. And then an aggressive drop back down. And at that point, I expect it to remain heavy and push down into this low. So this could actually be an area where a impulse rejection failure might actually be a nice valid entry technique. I don't like how it made perfect equal highs here, however. New hourly candle open. We spent the entire time above the 10 a.m. open as well. So that's at a premium of this 4-hour candle. We just consolidated there. And we look at, this is, that's that low I'm talking about. So down here, that could be a very nice place to take the partial off, as even inside the midpoint of this wick. But I think we can aim for that 12 a.m. open on limits. And then looking to see if we can get that as our final take profit all the way down here. Just tapped below this low by 1 tick, or just a few ticks. 1 tick. Running back up, this is not a last second wick. So I was looking at earlier, so it took the high forms at the first 15-second candle, and then it's drifted lower, plus left relative equal highs. So that's why I haven't trailed my stop down just yet. So I'm expecting that it could run up for these highs once again and then drop lower. I'm liking the rejection we're getting from these relative equal highs. See us getting above it. Also getting just above the 50s there. So right there we've got the 50s. What I don't want to see is us fully overlap this BISI, because this BISI is the one that ran out these highs and then we broke back down below it. So ideally I'd like to see us remain in the lower portion of that and then head lower. The stop loss is sitting up here. It's not right at the high because this model indicates, as you can see in this diagram, that we should remain quite heavy after breaking down, and so I'd expect this order flow in this area to hold us below it. So anything up here I'm expecting to fail. If we do fail from up here, this is the situation where impulse rejection failure as a place to add could actually be quite effective. And there we go. That is that trade over. So let's have a look at executions and quickly go over it. So it wasn't quite what I was looking for. We did end up taking this low out, and maybe that should have been where I went to break even. That could have been a good way to do it, because seeing as this is the bull flag low, technically, that's this low. Once we hit that, that should really be a place where I'm expecting either speed through it, like we see in the diagram, or if we're not going to have speed through it, I need to be cautious that it may reject from that area, which it did in this case. So I could have managed this trade better for sure. Didn't get that speed down through there. If I draw that over there, so that was what I was going for. This is what I wanted to see. However, what ends up happening is, sure, we got that aggressive drop lower, but then we pulled up. That was a great place to get in. Rather than dropping really hard down, it just taps that bull flag low and then rejected multiple times before ripping back up. So yeah, it is the setup, it is the model. It's just not it just didn't play out. It didn't have any follow through to the downside, which I was looking for. But it did play out the model in the sense that it did have this failure swing, aggressive drop lower, and then it traded to external range of this intermediate term low. This is still indicating bearish order flow, this entire consolidation, but yeah, I can't be bothered trying to find more trades at the moment. But yeah.